All right, we are live, guys. So, as many of you know, it's been kind of a roller coaster week on the stock market. But with that, it's presented some really good buying opportunities, which is what we're going to be talking about in tonight's Dividend Happy Hour. I'm going to be sharing with you 5 stocks in my portfolio that all look like pretty good buying opportunities. And I'm either taking a loss on these stocks or they're currently hovering right around my average cost per share. But we'll talk about all that more momentarily. Before we get into that, welcome to another Dividend Happy Hour. I'm so excited to have you guys joining me tonight. Hopefully there's not too much of we're good on the glare right now. But anyway, I'm so stoked to have you guys joining me tonight. Hope you had a fantastic week, and I think a quick cheers is in order. You guys know how we like to kick these things off. So here's to the yield, here's to the growth, and here's to that sweet, sweet cash flow. And also here's to you guys. Real quick, let me know a couple things before we get into it. Let me know, number one, what did you buy this week? Which stocks did you add to your portfolio? But also, number two, let me know what you are sipping on tonight for the Dividend Happy Hour. You guys saw my coffee mug right here. I'm sipping on some coffee. I also have just a little bit of water right here. Nothing too crazy tonight. I'll be honest, guys. I'll be honest. Earlier this afternoon, I actually indulged in a couple of cocktails. I got all my work done kind of early today, and got all my prep work for the stream done. And then I went and sat by the pool for probably an hour and a half, and brought a good book with me, and I brought a couple cocktails. I actually want to share with you guys what I'm reading right now. I just got a couple new books in the mail. So actually, first of all, I'm still working on the Abraham Lincoln book, which I talked to you guys about, I think, last week. It's called Ways and Means. But I just started also reading this book, The Education of a Value Investor by Guy Spear. And I gotta say, guys, I started this book maybe 2 days ago, like on Wednesday, and I'm already almost done with it. I have less than 20 pages left in it. Really, really good book, really easy book to read. I'd highly recommend you guys check it out. And then I also picked up this book right here, Fantastic Moats and Where to Find Them, there's not really an author mentioned. It's Freeman Publications, but I don't know. Seems like an interesting book, and also a very easy one to read as well. So I'll let you guys know how that goes. But let's go through, and I want to say what's up to you guys here. It looks like there's about 97 of us, almost 100 in the live stream right now. So let me say what's up to everyone here. I see Sean, I see Shamir, Charles, Don, Steve, Michael, Anthony, Kevin, Melanie, Big Chris. We got Financial Freedom from Dividends. Let's see here. We got Thomas. We've got Steven. We've got the one and only G-Man, G to the M to the A to the N. Todd's in here. We got Carmagna? Carmagna? I'm sorry if I mispronounce this, but Ultra Runner's in the building. We got Zal here. Zal, you working tonight? I think Friday nights, you usually get the Friday night shift, huh? Hero of the Table is in the building. We've got Ricardo, J Money, Paolo, Miguel, El Dynamico's here. Big Bad Jack Murphy's in the building. Kevin, Sean, Mountain High, Trey. We got Gavin here as well. We got Minister Williams, who, as far as I know, is not in any relation to me, but maybe somewhere along the line we're related. That'd be cool. Ben's here. We got Shamir. I already said what's up to Shamir. Sorry, Shamir. Yeah, I don't need to apologize. You probably don't mind it. Sebastian. Who else we got? Dresh is here. Joseph, Jacob. The whole gang's here tonight. We got a really good crowd. And for those of you who are just now joining, I think looks like there's almost 120 of us right now. In tonight's live stream, I'm going to be talking about 5 stocks in my portfolio that look like pretty good buying opportunities. And from my understanding, or from what I remember off the top of my head, 4 out of the 5 companies we're going to be talking about have all really come down in share price, or are all like in a pretty nice downward slump right now. One of them is actually performing quite well. When we'll talk about that more momentarily, but that's what we have on deck tonight. And as far as the purchases, just going through what you guys bought this week, and just so you know, I picked up some ORCC this week, which if you saw my video from Wednesday, you'll already know that. But Shamir picked up some TD, BMO. Looks like he made a run on the Canadian banks as well as some Realty Income. Sebastian got some Johnson & Johnson, Walmart, and SCHD. Todd picked up some Realty Income. Good pickup. Realty Income, spoiler alert, we're going to be talking more about it later, but it's officially under $60 per share. And I know that's where a lot of you guys like to start buying. I've seen it in the comments before. I've seen it in the Discord. A lot of you guys like to start adding more to Realty Income under $60 per share, and I don't blame you. But like I said, we'll talk more about Realty Income momentarily. Paolo picked up some Pfizer, SCHD, and Verizon. I'm just going to assume every single week SCHD is going to be just one of the most popular pickups. Nothing wrong with that, by the way. It's obviously a great fund, and it's come down in share price in its own. So, good one to buy, definitely. But Charles here actually picked up some AT&T and Ares Capital. Very nice. Very nice. Going for that income this week, Charles. Hero of the table, some SCHD and Lockheed Martin. I'm seeing Dresh picked up some Dollar General, which is the first time in a long time I've seen that. Dollar General is a pretty solid company. And American Tower Corporation, which has really come down in share price. My Sunday video is going to be like the best stocks to buy in June, or discounted stocks to buy in June. I'm excited for you guys to watch that one because we've got 5 really good companies that we're talking about. I almost talked about AMT, but ended up switching it out for another one. But still, really solid real estate investment trust. Melanie, really cool milestone actually. I bought more SCHD, just crossed 800 shares. And you know what? Actually, on that note, let me scroll up in the comments because I saw a comment in the live chat from Kama. I hope it's still there. If it's not, I won't be able to pull it up, but I'll still tell you. So Kama, if I remember this correctly, here we go. Here it is. So really cool milestone for Kama. Side note, I just passed $2,500 a year in dividends. Pretty stoked. That's awesome. That's a really cool milestone. So Kama, you're watching the replay. Congratulations, man. You keep up the good work. But anyway, getting back to your guys' purchases, and we'll get into the main event here in just a couple of moments. But I kind of want to show some more of your guys' purchases here. So Sean picked up some actually really nice shopping spree. JEPQ, Universal Corporation, GLPI, which the name of that company is on the tip of my tongue. It's going to bother me. GLPI is not Corning. It's Gaming and Leisure Properties. I was way off. GLW is Corning. Vici, NTST, which sounds like another REIT, IIPR, and BXMT, which I'm not familiar with. Gavin here added some more United Health Group, which is a really solid company. Looks like my man Minister Williams, the minister himself, some QQQM. Let's see. I'm actually kind of going back in the comments. Sorry, guys. Let's see here. Financial freedom from dividends, really, really big shopping spree. SPHD, AbbVie, Realty Income, Coca-Cola, Union Pacific. Look at all those guys. Wow. Let's see. How many Dividend Kings are there? 1, 2, 3, 4. Union Pacific's not a Dividend King. 5. Some people count AbbVie, so we could say 5.5. AbbVie, because it spun off from Abbott Laboratories, which is a Dividend King. I know some people like to count AbbVie as a Dividend King, but technically that company in itself has been growing for 9 years. So let's say 5 Dividend Kings this week. That's still pretty good. And in the building, guys, we've got the one and only Professor G here for the easy to read books. Yeah, man, it's even better if they have pictures in them, huh? At least that's how I like them. Let's see here. Yeah, man, picked up some AT&T and Leggett & Platt. Really good stuff. Zal bought some NVIDIA and Broadcom on Tuesday morning. That definitely was a solid pickup. Good stuff, man. And then I got to say what's up to Kevin Burgess. What's up, Kevin? Only water for me tonight. You and me, my friend. You and me both, I mean. Sometimes little H2O just hits the spot. Let's see here. What else we got? Anything interesting here? Still seeing a lot of SCHD. Sorry, guys. I'm just kind of skimming at this point. Shamir says, hey, Kevin, great live stream last Sunday, which I agree. It was super fun being able to be a part of that. So if you guys haven't checked it out already, go to Kevin's channel. I'll put his comment back up here. Go to Kevin Burgess' channel. Watch his first ever live stream from last weekend. It had myself and Russ Knopf in it, Dapper Dividends. It was a lot of fun, and I think you guys would really enjoy the conversation. So definitely check that out. What else we got here? And then Dominique with some positive energy. Let's collect some cash flow next week. Some dividends coming. Cheers, everyone. Yes, I couldn't agree more. Couldn't agree more. And I see some of you guys, Fabio and High Tech, saying, what's up? What's up, guys? Let's see. Caleb drinking some Sierra Nevada straight out of Chico, California, which is a fun fact. They started right probably 45 minutes north of my little hometown of Yuba City. Let's see here. Yeah, Zal said that Lowe's dividend raise dough. I don't know. Yeah, I mean 5% or so, not too shabby, right? But and I guess all things considered, that's not a bad raise to ask for. But man, with a 20% 5-year CAGR, it's like, man, I would have loved to see at least 8, 9, 10%. But I'll take what I can get. No complaints still. So let's see. Let's keep going. I'm still going through the comments. Anthony says, finally catching you live. Man, I'm good to see you in here. Or glad to see you in here, excuse me. And real quick, guys, I know a lot of you guys know if you've been watching the Dividend Happy Hours, but immediately after this ends, we're going to be jumping over to the After Party, which is a bonus live stream that we're doing every single week. And the After Party begins immediately after the Dividend Happy Hour ends. And this is a Patreon exclusive live stream. It's only for the Patreon community, but you can actually join the Patreon for free with a 7-day trial. So you can watch the After Party tonight. You know, no harm, no foul, pretty much risk-free. You don't have to pay a penny. And it's a lot of fun. So in tonight's agenda, and this is kind of how it goes every week, I give you guys a weekly update to my main portfolio, the one that I show you in all my videos, show you what I bought, show you the dividends I received, how it performed against the market, and overall across the last week, month, year to date, all that stuff. And then I even give you an update on Peanut's portfolio, which is a Patreon exclusive portfolio that we started over there pretty recently, and we're growing every single week. So we'll dive into that, and we're also going to be doing a portfolio review. So members of the Patreon community can have their portfolios submitted to be reviewed by yours truly. It's just kind of more, just a little fun thing we do, and we actually have a lot of fun with it. But then afterwards, we're going to be doing some more Q&A, which I know is one of everyone's favorite parts of being a part of this Dividend Happy Hour. So there's more of that over there. And once again, you can tune into the After Party for free by joining the Patreon with a 7-day trial. There is a link in the description of the video. It's the first link right there. You can also find it right here. But I'd love to see all you guys over there. We're having a lot of fun over in the Patreon and the After Party. And I'm sorry about the glare right here. It'll go away. It'll go away momentarily. A lot of you guys have been telling me just get curtains, Ryan, so it's gone. But I'm going to be moving here in a couple months, so I don't really want to put up more curtains. I don't really want to have to drill in more holes in the wall if I don't have to. So unfortunately, guys, we're just going to have to make do right now. But let's see what else. Let's maybe go through one or two more comments before we get into the main event. So let's see here. Those fries. Okay. Yeah. Oh, yeah. The fries, the In-N-Out. So you guys were talking about Peanut. So Peanut's portfolio, Peanut's my cat right there. So you can see he's a hungry guy. Not only does he love his In-N-Out just like his father, but he loves his dividends as well. Another quality that I like to think that he gets from me. So anyway, I don't know what I was going to say after that. Like I said, guys, I'm coming off of having a couple cocktails from earlier this afternoon, so there's no telling what's going to happen in tonight's live stream. It's going to be an interesting one, but I think it's about time we get into the main event, guys. And so for those of you who are just now joining, there's 150 of us in here. Hopefully we get up to 200. Nobody leave before we get 200 people in the live stream. That's the rule. But yeah, sorry, I'm seeing the comments. I'm actually going to hide the comments because they do get a little bit distracting, and I have enough trouble multitasking and doing one thing right as it is. So. But anyway, getting into the main event, guys, tonight we are talking about 5 stocks in my portfolio that have either come down in share price and I'm taking a loss on, or they're currently hovering right around my average cost per share and look like good buying opportunities, ones that I wouldn't mind possibly adding more to in my portfolio right now. And we're going to start with the first one over here, actually, which is none other than, actually, it's not, I don't even know if you guys saw it. Do you have any guesses as to what this first one is? Any guesses real quick before I reveal it? I'm glad that it kind of covered there so it didn't show you the ticker symbol. But do you guys have any guesses as to what this first one is? And J-Lock's right. Yes, we're talking about paper losses here. So I'm all down unrealized loss. So Mountain High guesses Intel for this first one. Starbucks. I saw some whisperings about Starbucks before the stream started, and spoiler alert, it's not Starbucks. Starbucks is not on our list tonight. Kevin says T-Row, which I actually do not own in my portfolio. Let's see. Patel Ron says Kilroy. Steve is begging me, not Kilroy Realty Corporation, please. Well, Steve, you're about to be pretty disappointed because it is none other than Kilroy Realty Corporation. This is one stock in my portfolio that has come down quite a bit, and I won't spend too long on this company because I know I talk about it all the time, guys. But still, right now for me, it is a really good buying opportunity because in the last year, it's down over 55%. Okay, in the last month, it is down 8%, and then year to date, it is down nearly 30%. And the thing with KRC, like I've been kind of nibbling away, but the second I buy, it just keeps going down in share price. So right now, it looks like KRC is kind of a, what do you call it? Kind of a falling knife sort of deal. And, it's kind of got me questioning whether or not I want to add some more to it. But nonetheless, I'm down quite a bit. And I'll show you my position momentarily. But before we get to that, just taking a brief look at the valuation. The forward P to FFO, price to funds from operation, which is kind of like the real estate investment trust equivalent of the PE ratio. And we can look at it the same way. This is really low, under 6. Okay, 5.9, that's a really low P to FFO, and it's certainly, if you go over here, certainly much lower than what we'll find with other real estate investment trusts. So compared to the sector median P to FFO, it's 50% lower, so that's a really nice valuation. And then in terms of the dividend yield, it's looking pretty good as well. So as that share price is coming down, the dividend yield goes up. You guys know how it goes. And if we go look at this, so the 4-year average yield for KRC is 3.5. The forward yield right now is sitting at 8. And this is mostly because the share price has just come down so much. I mean, like we saw, it's down over 50% just in the last year. But nonetheless, the rest of the dividend stats are looking pretty solid, guys. The payout ratio right here says 106%. But keep in mind, guys, on Seeking Alpha, if we're looking at real estate investment trusts, they're going to always show the earnings payout ratio. For real estate investment trusts, you'll see this with Realty Income, WP Carey, AMT, Vici. Most real estate investment trusts you look at are going to have a high earnings payout ratio. But with real estate investment trusts, we want to look at the funds from operation payout ratio, the FFO payout ratio. And for KRC, we won't pull it up because we're trying to get through this quick because I don't want to shove it down your throats too much. It's like 45%, so it's a lot better. But anyway, they've been growing this dividend for the last 7 years, and they have an even longer history of maintaining dividend payments. So they've been making straight payments for the last 25 years. And really the only time they cut their dividend or reduced it was during the great financial crisis back in 2008, 2009. And for the years following that, it stayed pretty steady. They didn't really do much growth, but since 2015, 2016, they started growing that dividend again, and they've been growing it steadily ever since. But real quick, showing you my position with KRC. If we go over here, hopefully you guys can see that. Yeah. Here's my position right here. I officially have 67 shares of KRC at an average cost of $38.31, and for a while, this was over $40 per share. But like I said, I've been kind of nibbling away at it the last few months. It's been a falling knife for me. As soon as I pick up a couple more shares, it just continues to go down, and the current share price is under 27. So there's quite a big spread here. And as I'm sure you can imagine, I'm taking quite a loss. I'm down 30% with my KRC position. So a really good opportunity to average down. And like I said, this is where it becomes a buying opportunity, because I have a really good opportunity to continue lowering my average cost per share, because there is quite a spread here. And even on a total return basis, if we work dividends into the calculation, it's not really helping me too much. But this is one of the higher income generating positions in my portfolio. It's currently bringing in about $145 a year, and it makes up about 7% of my portfolio's total dividend income, And this is kind of where I go back and forth in my head about KRC, because, sorry about this, guys. I'm really sorry about that. This is where I kind of go back and forth on KRC, because I really think there's a mismatch between the company's fundamentals and the direction the current share price is trending. And I get it. General office sentiment, not good. The company still seems to be firing on all cylinders, which makes me want to add more, because I think it's going down, but it's still like rock solid financially. But it's becoming a number one. As soon as I buy, it just continues to go down in share price. So I'm like, maybe I hold off until that tide kind of changes, or else I'm just going to keep trying to chase a falling knife. Probably not the best move, but 30% loss. I need to hide these comments. I'm sorry, guys. But then secondly, it's already 7% of my portfolio's total dividend income, and that's quite a big amount. I don't know that with where it's at now, I don't know that I want to continue adding and making it an even bigger portion of my portfolio's income, when I would rather bolster my portfolio with some other positions and make other positions bring those up in terms of the amount of income they're bringing in for my portfolio. And I'm thinking positions like Procter and Gamble, like Johnson and Johnson, which we'll also talk about in just a moment. Another spoiler alert. Some more ones like those, Lowe's, even Snap-on. Snap-on's not really the best value right now, but those sort of companies, I'd rather put more money towards those. And I'm considering adding another company to my portfolio in the near future, which you guys will be the first to know. I might make a new video about it in the next few weeks. I haven't pulled the trigger yet, but as soon as I do, I'll make a video on it. So that's kind of where I'm at with KRC right now. But nonetheless, guys, I want to switch gears and move over to the second stock that is a buying opportunity right now. It's another real estate investment trust. We actually have 3 real estate investment trusts we're talking about right now. And sorry guys, I'm trying to do like 2 things at once. Let me jump back over to the screen because the second company is WP Carey, WPC, who's also seen a pretty nice drop in the last month themselves. They are down 6.73%. Excuse me, I'm going to take a sip of water real quick. Sorry, guys. Whew. All this talking has got me thirsty. These pretzels are making me thirsty. What's that from? Anyone know? Anyone know the reference? Please tell me. Please tell me you know the reference. These pretzels are making me thirsty. I'm going to wait. I want to see if anyone gets it in the live chat real quick, actually. Shamir, of course you got it. Of course. It's Seinfeld. It's a Seinfeld reference. Yeah, you guys are too good. You guys are too good. Love it. I'm proud you guys know that. So anyway, going back over here, WP Carey down 6.73% in the last month. Year to date, they are down 13%. So this real estate investment trust has seen quite a big drop. Current share price is about $68 per share. So they've come off their February highs of about $85 per share. Really steady downward movement for this company, and they are getting really close to their 52-week low. They are basically there. And the P to FFO is really not too bad. It is here in the double digits. This is over twice what we had with KRC a moment ago. But still, a P to FFO of 13-ish is really not bad. And I'm officially in the red with this position, which we'll see in just a moment. But looking at this, the dividend yield real quick, this is also, as I'm sure you can imagine, as the share prices come down, it's a bit higher than average. So the 4-year average yield is 5.5, which is pretty dang high, which I guess is to be expected from a real estate investment trust. But the yield right now is even higher, 6.3%. So that's looking really good. And the rest of the dividend stats are looking pretty solid as well. I mean, the growth rates... actually pretty non-existent, only 1%, which I guess is a fair trade-off for this high yield. But the dividend growth history is not too bad. It's decently respectable, 9 straight years, and I think they've been growing it for quite a bit longer. Maybe not, okay? Maybe not. I guess I'm wrong. 9 years of payments as well. But what's this looking like? No, okay, this is wrong. Seeking Alpha is tripping. So their dividend consecutive payments go all the way back at least to the 90s, it looks like. Possibly even before this. So they have a really long track record of paying the dividend. But anyway, WP Carey is a really solid real estate investment trust. It's kind of more akin to something like a Realty Income. It's definitely more comparable to Realty Income than it is to KRC, just in terms of the type of assets they have in their portfolio. But showing you my position real quick, if we go back over here, let me see. You guys can see that, right? Yeah. I just have to keep checking to make sure I'm on the right screen. I have 22 shares of WP Carey at an average cost just under $70 per share. And there's really not too much of a difference between my average cost and the current share price, so I'm just barely in the red. But nonetheless, technically an opportunity to average down. I'm down about 2.5%. And this is a real estate investment trust I would not mind adding more to. It's not a big portion of my portfolio right now. It's only about 3.5%. So there's still a lot of room to add to this position and increase its allocation in my portfolio, which I wouldn't mind doing. I talked about bolstering my portfolio's income with some more, how do I say it? Because I don't think Kilroy is a bad company. I personally don't see it as too risky, just from a fundamental perspective. It's, like I said, it's doing really well. But I do think that WP Carey is quite a bit more diversified in their portfolio. So from that sense, you could consider it a bit more stable. And so I wouldn't mind adding, bolstering my portfolio with positions more like this. Same thing with Realty Income. And even from an income perspective, it's not a huge portion of my portfolio's annual income, less or about 4.5%, not even $100 per year coming in from WP Carey, which I should fix, honestly. I should get this up to $100 per share. Same thing with Procter and Gamble right here, which is just about 1 share shy of hitting that point. I think I need to buy 2 shares of WP Carey No, yeah, about 2 shares of WP Carey to hit that point. But at any rate, I feel like I have a really good opportunity to add some WPC right now, and I think the opportunity will become increasingly good because I keep needing to hide the comments. Sorry, guys. I could see WP Carey continuing to go down in share price, but this is one that I would not mind buying the dip on. For all the reasons I kind of mentioned. High yield, it's a really well-diversified real estate investment trust. The financials look really strong as well. So yeah, I think it's another really good buying opportunity in my portfolio right now. And that brings us to the third company. I'm actually going to kind of switch the order that I have these in. Since we're talking about real estate investment trusts, we might as well just keep that trend going and get this third one out of the way because I don't know, something about real estate investment trusts right now, guys, really good buying opportunities. This third one, and I know many of you guys are taking advantage of this one. This third one is Realty Income, the monthly dividend company. And I saw a lot of you guys buy that this week earlier in the stream when we were talking about our purchases. But in the last month, Realty Income's down about 5%. I mean, this is pretty nice, guys. It was just recently at the beginning of the month, $63 a share. It's about $5 less than that right now. And then year to date, they're down 8%. So, quite a decent drop for Realty Income so far in 2023 and in the last year. And it looks like they're low. Yeah, back in October, they hit a low of $55 per share. And it's really not too far off from that. It's less than 10% away from hitting that again. And furthermore, it's less than 10% away from hitting a 52-week low. And I would not be surprised if it does get down that low. But anyway, talking about the valuation, just looking at the P to FFO, this is not too bad. 14.2. So I think that was just a couple points higher than what we saw with WP Carey. And out of the three REITs we've talked about so far, this is obviously has the highest P to FFO, but still in its own right, 14 is not too bad. And take this, I don't know, kind of take it how you want it, but Seeking Alpha and Wall Street and the analyst, Wall Street and Quant Rating, which is Seeking Alpha's proprietary, I guess, rating system for companies, it's all looking good for Realty Income. I mean, I don't really need to give too much props to Realty Income. You guys are already pretty well familiar with the company, but let's look at the forward yield or the comparison between the yield right now and the average yield. So the average yield for Realty Income is 4.3. Okay, pretty high yield. And right now the forward yield is sitting about 1% above that. So that's really good. Yeah, like to be able to get a higher cash flow return. And then remember what I was saying about the payout ratio earlier with KRC, how it's typically, you'll see this on Seeking Alpha above 100%. Yeah, don't let this concern you guys. This is the earnings payout ratio with REITs. Once again, we need to look at the FFO payout ratio. And if you want to see that, you can go over to financials, scroll down to the bottom, look at the supplementary items, and you'll find the FFO payout ratio there. But nonetheless, with Realty Income, we've got a nice high yield, a better 5-year growth rate than what we've saw with WP Carey for sure. But still, just under 4%, nothing too crazy. And then the dividend growth history is probably the shining star, or one of them, I guess. This yield's nice, but the dividend growth history is the shining star for the dividend. 26 years, Realty Income is a dividend aristocrat. And let's see what this looks like, guys. Look at that. Yeah, this is what we'd like to see. When you're looking for long-term investments, long-term holds, this is what you want to see. But anyway, just jumping over, showing you my Realty Income position real quick. Out of the three companies we've talked about so far, I'm actually probably most excited to potentially buy more of this one. And this is the only one so far that I'm not currently taking a loss on, but it's close. Excuse me, I'm getting really close to my average cost per share. So my average cost is about $56.50. Current share price, $58.66. So I'm only up, where is it, right here? Just under 4%, so 3.7%. On a total return basis, including dividends, I'm crushing it, 15.4%. But just in terms of share price, I wouldn't mind adding with even though I'm up just a little bit still, I would not mind adding a bit more to Realty Income at these levels. And this is one that if it did continue to go down, if this did become a falling knife, kind of like a KRC, I don't think it would ever do that to that extent. But, if it continued going down, which would not surprise me. Sorry, guys, I'm starting to mumble. It's about that point in the stream where I start to not mumble, stutter. Anyway, I lost my train of thought. But anyway, if it did continue to go down, would not mind adding more. And it's not a huge position for me. I actually haven't added to Realty Income in a long time. I don't remember when my last tranche was, but I don't believe it was at all last year in 2022. It was probably sometime in 2021 where I last added more to Realty Income. But currently it's about 5% of my portfolio, so there's definitely room to increase this. And then in terms of income, it's 5.5%. So once again, definitely room to increase this. And if I'm really being objective with my portfolio, I don't think there's any reason KRC should be just amongst the real estate investment trust in my portfolio. There's no good reason KRC should be a higher percentage of my income than Realty Income. If I want to reduce my risk as much as possible, with which I do, I would be best served adding more to Realty Income and WP Carey than KRC right now. I have enough KRC right now. If things change for the company and it stops going down in share price and kind of starts to trend in the other direction, then that's a different story. But right now I probably would be best talking about buying opportunities, taking advantage of this one with Realty Income. But anyway, guys, here comes the stutters, guys. Anyway, jumping over to the fourth stock, let me pull it up real quick. We only have 2 more to go. The next one is Johnson & Johnson, a legendary dividend king, guys. It's currently sitting at 154.35. In my position, which we'll see momentarily, my average cost is in the 160s still. So definitely some opportunity to average down. And this has been a roller coaster lately. So they started the year just above or just under $180 per share, dropped down to a low in March of 151-ish, not too far above where they're at now. And, they're definitely headed back down in that direction and could potentially get even lower. 52-week low is about $150 a share. I would not at all be surprised if it hit that and then continued to go down. And the PE ratio for J&J right now is not bad, 14.5. And let's see how this compares to the 5-year average. So it's a bit lower. Okay, 14.5 PE ratio is a bit lower than the 5-year average by about 13.7%. And it looks like the same is true for the price to book and price to cash flow. The current price to book is 10.5% lower than the average, and then the price to cash flow is 23% lower than the 5-year average. And this is getting pretty close to being in the double digits. Definitely headed that way, so we'll see what happens. But as far as the dividend, let's look at the forward yield. So the 4-year average yield, actually we can do this. The 5-year average yield is 2.67%, but the forward yield right now, 3.1%, which is really nice. Is about 15.6% above that average. So much nicer cash flow return today than even earlier this year when it was sitting at its year-to-date high of, I guess $180 per share. So there's definitely an opportunity right now with J&J. It seems to me at least. And, you can't go wrong with this one. Pretty decent 6% dividend growth rate. That's not too bad. I mean, both of these metrics are very sustainable. 3% yield's nothing too crazy. 6% growth rate's nothing too crazy. And clearly they've been able to manage this because they've been growing the dividend for the last 60 straight years. But showing you my position real quick, I have almost 22 and a half shares. And like I said, my average cost is still in the 160s, 163.59, which puts me at this loss is getting bigger by the day, 5.65% loss. And I'm officially in the red on a total return basis. But it looks like, I guess if you do the math, dividends currently make up about half of my total return. Not half. I don't know how to word it, but dividends are cutting my share price losses, my market losses, unrealized losses about in half. So that's good. And so far with J&J, I've received about, which makes sense, about $114. And this is actually a decent portion of my portfolio. So where is it? So right here, if we look at how it's allocated, it's about 8%, just under 8%, which I think makes it the 3rd largest position, right behind Procter & Gamble and Starbucks, but I'm not complaining. Actually, I've kind of been working towards this. I wanted Johnson & Johnson to be one of my core positions. So I'm happy to see it up there, and I actually wouldn't mind continuing to add more until it's up in the 8%, possibly even the 9%. A company that's as stable and reliable as this one. These are the type of companies that I want to make the bulk of my portfolio. These are those sleep well at night stocks, those swan stocks that you don't have to worry about, that if for some reason the market were to close tomorrow for 5 years, you rest assured that by the time it did open again and things were rocking and rolling, J&J would still be there. Your position would still be fine and probably better than it is today. Even in terms of my income, it's only 5% of my income, so there's definitely room to grow here. So, let me take another sip of water, guys. Sorry, that was kind of going on a roll. And guys, we are at like 200 people in the stream, so don't leave. Nobody leave. Let's see if we can get to 300. How about that? What if we did that? The stream's not ending till we hit 300 people. We'd be here probably for a week. But anyway, guys, this brings us to the last stock, the fifth stock that looks like a pretty good buying opportunity right now. And this is one that I talked about in my last video. So that kind of spoils it probably. But let's go back over to the screen real quick and just briefly talk about it. I don't want to spend too much time on it because we do got to get into the Q&A. But this last stock is Owl Rock Capital Corporation, ORCC, which in contrast to the rest of the stocks we've talked about is performing pretty decently so far. Excuse me, let's do that. Pretty decently so far this year. So just in the last month, they're up 4.5%. So they're doing really well. While all the other stocks we talked about are down, this one is up. And then the same is true on a year-to-date basis where they're actually up 12.7%. And this is only share price returns. If we go over here and take a look at the total return, which is important to do for a company like this because admittedly, most of the returns are going to come from the dividends. It's going to come from that cash flow because this is a high yielding position. So it is important to look at total return. I actually think that's good practice if you're looking at whatever you're looking at. I think it is good practice to look at the total return. But nonetheless, guys, in the last month, they're outperforming the S&P, up 5%. Same is true year to date. They're up about almost 16%, while the S&P is up just under 11%. And I think the same is true both in the 1 year and 3 year period. So really outperforming the S&P in the last year. In the last 3 years, this is where it starts to change. So the S&P over the last 3 years is taken over ORCC, but it's pretty close. You know, there's not too much of a spread there. They are neck and neck, and I think the same is true. Well, no, I guess the same is definitely not true over the last 5 years. But this is because ORCC came onto the market back in 2019. So we really can't look too much farther than the last 3 years. So since inception, since it's came onto the market, you know, it's held its own pretty well against the S&P 500. And if we go look at the valuation real quick, we're not going to look at the PE ratio because the price to book is probably the better metric for a business development company. It's currently trading below its book value, so 0.85 price to book. Do like to see that. And I talked about this in my recent video on ORCC, the discount to net asset value, which is another important metric for business development companies. I think they were trading at like a 13% discount to net asset value or something like that. It might be less now because they have come up a little bit in share price just in the last couple of days, but you know, still decent discount there. And showing you my position real quick, guys, I actually bought some more ORCC this week. I added 7 more shares, which brings me to about 115 and a half shares of this company. And once again, the share price and my average cost per share are neck and neck. I'm basically breaking even on my ORCC position, but if I wanted to, this would be another good buying opportunity. It's only 3.5% of my portfolio's total allocation, but just kind of like with KRC, this is where it gets tricky because it is 7.4% of my portfolio's total income. So because of that, because it's already a substantial amount of my portfolio's income, I'm not sure how much more I would want to add to ORCC, even though I do think there is a decent buying opportunity right now. So, you know, out of the 5 stocks we talked about, ORCC, I think they're all good buying opportunities, but ORCC and KRC are the ones that I'm not sure that I will pick up any more shares of right now, which means that Johnson & Johnson, what were the other ones? Johnson & Johnson, Johnson & Johnson, Realty Income, and WP Carey right now in my portfolio are all looking like pretty good pickups. And I actually think, too, just kind of last note, Procter & Gamble's not too bad either. Okay, I'm only up about 4.7%. Altria Group, I could, but it's already almost 10% of my portfolio's income. So I don't know. Main Street Capital Corporation, yeah, I could, but once again, I think I'd be better off going with J&J or Realty Income or WP Carey. But it looks like there's a couple other good opportunities in my portfolio right now. But out of the bunch, once again, guys, the only ones that I'm really interested in adding more to actively would be WP Carey, Realty Income, and Johnson & Johnson. Probably Johnson & Johnson more than those other two. Actually, if we were to put it in order, here's what we would do. Realty Income, actually, interesting. Realty Income, WP Carey, and Johnson & Johnson. I'd love to build up my allocation in the real estate investment trust. But anyway, I want to put it back on you guys. That's what I have going on. I want to hear from you, though. What are some good buying opportunities in your portfolio right now? I'd love to hear what you have your eye on, if there's anything you're averaging down on or looking to add more to. I'd be actually curious to hear if we have any of the same ones that we're kind of looking at. So let me know that there in the live chat, or if you're watching the replay, let me know in the comments below, please. Let's see here. I'm going to go through some of these comments here. Let's see. I'm kind of scrolling up just to see what I missed here real quick. Just keep scrolling down. Okay. So for you guys, let's see here. JLock, USB, US Bancorp, and AB, Anheuser-Busch, I believe, right now. Okay. Gavin says, looks to start a position in TMO. I don't think I'm familiar with that company. Joseph says Coca-Cola, TCAF, Pfizer. Yeah, Pfizer's looking good. And OLN. I don't think I'm familiar with OLN. Zal here says Ally, UGI, Tyson Foods, and T-Row. All those are looking great. Yeah, really looking great. Bold Troll, yeah, I mean, you can't go wrong with this one, obviously, SCHD. I bought some MFC this week. Yeah. Alexander says, please no KRC. Okay. I'm done. I'm done talking about KRC tonight. You guys hear it enough from me. We don't. I know how most of you feel about KRC. That's fine. And like I said, I don't want to keep shoving it. I really don't want to shove it down your guys' throats. But anyway, Sunshine Design USB is unreal. Charles says he would actually dollar cost average warrant to AT&T. That's okay. I could see that. Lou here says just averaging down on BDJ. I'm not familiar with that one. Shamir, Johnson & Johnson, Canadian Banks, which like he bought a lot of them this week. Realty Income and Tyson Foods, pretty good picks. Joseph, SCHG, and AbbVie. Yeah, AbbVie's another good one. I'll be talking about AbbVie more in my Sunday video. Jared, really good picks here as well. Looks like we have a couple of the same ones. Realty Income, Pfizer, Johnson & Johnson, SCHD. I'm sorry, I'm reading a crypto comment. Let's see. Hero of the Table says AbbVie looks tempting as well. Let's see. Todd adding to Realty Income, J&J, and Parker Hannafin. Federico says ARE. I'm not familiar with that one. Zack Attack D, which is... Oh, what is D? Dominion? Is that what it is? I think that's what it is. Dominion Energy, yep. Verizon and EPD, yeah, those are good ones too. EPD is another one. If I'm kind of watching EPD because yeah, that's another one that I wouldn't mind, but it's still quite a bit above my average cost. Kevin, thinking seriously on Home Depot when I've completed Johnson & Johnson. Yeah, you can't go wrong there. Oh, okay. AB is Alliance Bernstein. My bad, J-Lock. Thank you for the clarification. Victor says Pfizer, Realty Income, WP Carey. Nice. We got a couple in common there. Trey is going with Land. Caesar with some SEHD and AbbVie. Amadou, Pfizer, Verizon, Altria Group, and Realty Income. Thomas says Target. Yeah. And I know, guys, Target, a certain portion, and I'll be talking more about Target in Sunday's video as well. But a certain portion of their current decline has to do with boycotts. And I'm sure some of you guys have thoughts on that. That's totally fine. I really don't want to get into that. But, it could be a potential, got to put your investor hat on. It could be a potential buying opportunity to buy a historically solid and stable Dividend King at a nice discount. So Pat here is going with WBA, Walgreens Boots Alliance, Devo, and Procter & Gamble. Melanie, this is actually a good one. 100 shares of SCHW when the yield was over 2%. Yeah. Charles Schwab Company. Yeah, love them. Let's see here. Rex says Realty Income, Union Pacific, and Verizon. Good stuff. So L Dynamico's hitting both WBA and Paramount because they're at 52-week lows. Let's see here. Sunshine's going with some J&J. Let's see. Jay's going with Kroger. Yeah. Charles, don't talk about KRC or Starbucks. Ryan will get mad. Yeah, you won't like me when I'm angry, guys. No, I'm just kidding. I respect your guys' opinions. I appreciate you sharing them with me, whether they're in agreement with me or not. Trey says averaging down in WP Carey and slight averaging down in Union Pacific. Anthony's going with Enbridge. Nice. Okay. Chris is going with Johnson & Johnson and Visa, which I think... Yeah, Visa's a new position for Chris. He was talking about it in the Discord. So AJ's going with some Realty Income and SCHD and also HBAN. Yep. Kevin's going with Medtronic. And actually, real quick, you guys, Kevin on his channel posted a really good video. It wasn't yesterday. It was a couple days ago at this point, maybe a few days ago, where he's talking about some of the smaller positions in his portfolio that he's going to be adding more to, holding on, or getting rid of. He's maybe doing some consolidation and is kind of categorized. It was really interesting watch. So I highly recommend you guys check out that video. There was one stock in particular I was happy to see, but we're not going to talk about it. We've met our quota with it for the day. J.S. Gonzalez going with Stanley Black & Decker and Verizon. A lot of Verizons in the live chat. Nice. Ultra Runner's going with DGRO. CE is Celanese, I believe. CC, I'm not familiar with CC. We got VNQ and then Realty Income. Let's see. Jim. What's going on, Jim? Stanley Black & Decker and Tyson. Let's see here. Financial Freedom from Dividends going with Target, Home Depot, AT&T, and Verizon. Some nice big blue chips there. My man Russ going with Nexstar Media, which you guys should check out for a communications company. If you're looking for something that's an alternative to like an AT&T or a Comcast or Verizon, Nexstar Media looks pretty solid. And then he's going with some more Target and Vici. So good calls. So let's see. Oh, okay. So ARE is Alexandria Real Estate. Okay. Yeah. Nice. I think Nexstar Media is kind of like, no, we're not going to talk about it. We're not going to talk about it. Sorry, guys. I have a problem. Zal says, when you get angry, does your portfolio turn green? Gosh, man, I wish. Let's keep going here. I think we're kind of past the positions you're averaging down on. So if you guys have any questions, we have about 13 minutes left here in the live chat, or in the Dividend Happy Hour, excuse me. If you guys have any questions, anything you want to talk about, let us know. Let me know in the live chat. I'd love to pull them up on the screen and see what you guys have to say. So, okay, this is actually a good question. So we'll kick it off with this. Burn Survivor wants to know, when do you get Kenvue from the J&J spinoff? So when are you getting your Kenvue shares, which is the consumer health, consumer packaged goods company that will be spinning off from J&J? So I believe, and once again, Kevin put out a really, really freaking good video on this. So I'd go to his channel after this stream if you're not joining the after party, that is. And watch that video. But we should be getting the Kenvue shares sometime in probably October or November. It should take about 6 months or so from now. Probably less than 6 months from now, actually, to get them. But it should be around that time, sometime towards the end of the year. So, Brandon, this is a good question. So what are your top 3 forever hold dividend stocks or ETFs? I'm actually going to screenshot this question because I think it'd be a good one to refer back to in the future. So top 3 forever hold dividend stocks or ETFs. So I'm just going to keep it individual stocks. So I think it's too easy to go with ETFs. So, okay, top 3 are going to be, I'll tell you what, Zal knows me pretty dang well. Procter & Gamble would definitely be up there. Johnson & Johnson would definitely be up there as a hold forever stock for me as well. And I think SCHG is kind of a cop-out answer for this, so I want to give you something better than that. I think I'll give you a few options too, because it's hard to narrow. It really is hard to narrow it down to just 3. Starbucks is up there for me. Snap-on's up there for me, and Lowe's is also up there for me. So I would say those are all core positions for me as well. Those are all in my those are my top 5 stocks in my portfolio right there. Just in terms of weighting. So, man, those would be all hold forever stocks for me, assuming that nothing goes substantially wrong with them. But yeah, I feel really great holding all of those and having bigger positions in those. So let's see. Rex, this is a good question too. Would now be a good time to open a position in 3M? I'm going to save this question as well. So that's a tough call because stuff with the litigation is still pretty murky. It's still pretty unclear how that's going to be resolved and what that's going to look like, and what will happen with the company from there. So it's tough to say whether or not it's a good time to start a position in 3M. I could be wrong on this, but I would imagine that, and 3M's come down a lot in share price, right? I don't remember exactly how down they are just in the last month, but it's no small amount. They're officially under $100 per share, which is a point where I know a lot of you guys actually also were considering adding more to 3M. So I know some people are buying more 3M right now because it has officially dipped under $100 per share. But I would not be surprised if it did continue to go down. And I could. So having said that, here's my answer. I would not be in a rush to start a position in 3M. I would keep an eye on it and see what happens. Keep your ear to the ground on the litigation and see how this plays out, which could take some time. But I wouldn't be in a rush to start a position in 3M right now. If you're considering doing so because you think it's at a good value, it's at a good discount, maybe just wait a little bit because it seems to continue trending down. And so I wouldn't be surprised if you started a position on Monday. I wouldn't be surprised if over the coming weeks and months after that, it continues to go down. So that's why I wouldn't be in too much of a rush to start a new position in that company quite yet. That's just me, though. J-Lock says, how do you feel about averaging up? Let the runners run up, let the runners run, or wait for a drop? Ugh. That's tough. That's something I'm still trying to navigate through. I'm thinking about a couple positions in my portfolio that we've kind of talked about so far tonight, like Procter & Gamble, and what were some other ones? What was another one that was up for me? Procter & Gamble. I mean, Lowe's. I'm up 6% with Lowe's, 5% with Procter & Gamble, 3.6% with Realty Income. In those instances, I wouldn't mind. I would consider adding up. But looking at other ones like, looking at other ones where I'm up quite a bit more, like Apple, I'm up 35.5%. I wouldn't add more to Apple right now. AbbVie, I'm still up 20.5% on AbbVie right now. Even though it's come down quite a bit, I'm still up quite a bit. So I personally wouldn't add more to AbbVie right now because I would wait to see if it gets closer to my average cost. EPD, even so, I'm up nearly 14%, and I'm waiting for that one to come down a bit more too. So for me right now, if it's relatively close to my average cost, or that's kind of, if I'm going to be averaging up, that's, at least for now, that's kind of what I'm looking for. So, but this is one of the good things about, I guess, being somewhat diversified is you can wait for a drop. While you're waiting for a drop in those sort of companies, you can always look for other companies that are at a better valuation to add to. So let's see here. Anthony says, what are your plans for the weekend? So tomorrow I'd like to read. Saturdays are kind of my off days from working or making YouTube videos or scripting or whatever it is I need to do. And so tomorrow I'm going to get a good workout in, spend a decent amount of time on the treadmill. I'd like to read. If I don't, I'm definitely going to be finishing this book, The Education of a Value Investor. If not tonight, I'll finish it tomorrow. And I'm going to hold off on starting this book because I'm going to Mexico in a couple weeks, and I'd like to just save this for that. And so I'll probably work on my Abraham Lincoln book. Oh, real quick, guys. Look at that guy. Hi, buddy. He's tired. So yeah, tomorrow I'll probably just hang out, sit in the sun, get a good workout in, and eat a lot. It's my refeed day. I've been dieting, trying to drop some pounds, but tomorrow's my refeed day, so I got a high carb day tomorrow that I'm looking forward to. So definitely going to get some good macros in. Let's see here. High tech. What stock in your portfolio will you try to get 100 shares of next? Oh, that's a good question. Let's actually, high tech, let's go take a look together because I don't know. There's a few that I'd like to. EPD's kind of on my radar because I have about 75 shares of that, so that wouldn't be too hard to do. I mean, KRC, I could do that as well, but we kind of talked about that. I'm holding off on KRC for now because I I just want to work on other things, and I don't want to keep buying into a falling knife like KRC right now. Even though I believe in the company long term, I'm gonna put the brakes on that for now. Let's see what else we got. So probably EPD. I say if I had to pick one, EPD's the closest, and I think this is a really great company. I would not at all mind having 100 shares in it. And I'll tell you what, if I did, it'd put me at about, let's see, so probably between $175 to $200 of annual dividend income with this position. So yeah, actually, so about $50. Yeah, so it'd be probably just under $200 of annual dividend income if I was to get that to 100 shares. So EPD is probably the closest one. Thomas says, you said you were moving in the next couple of months. Does that mean you and the fiance are buying? Yeah, we're gonna try. We're gonna work on probably getting pre-approved either next month or the month after, and start looking to buy. So yeah, that's kind of the plan. We'll see how it goes. I'll definitely keep you guys posted. And with that, kind of on that note, if you guys want to, I could even make videos on that. If not on the YouTube, I could do that on Patreon if you guys are interested in seeing that stuff. So yeah, I'd love to show you some other stuff as well. So let's see here. And just so you guys know too, we've got about 5 minutes left in the live stream. I know I've talked about it a few times, but immediately after this live stream ends, we are going to be jumping over to the after party, which is a Patreon exclusive bonus live stream that we do every single week. And it goes about an hour long. So we'll typically start at about 6:10 Pacific time, my time, and we'll go to about 7, sometimes 7:15. Sometimes I'm on there for like an hour and a half. It just depends. But it's a lot of fun, and you can actually join the Patreon for free. So if you wanted to check it out tonight and just see what it's all about, there's a free 7-day trial to join the Patreon. And I'm also over on the Patreon. I'm giving away my stock analyzer spreadsheet. I'm going to give it away for free to all of you guys here on YouTube. Just give it away to the public for free soon. I haven't put everything that I need to together for that. So it's only available for the Patreon subscribers right now, or Patreon community. But once again, it's free to join. Check it out. I'd love to see all you guys over there in the after party, especially for tonight's portfolio review, because we have this is a really interesting one. This one I spent a lot of time looking at this portfolio today, kind of chewing on it. And this is the third week in a row we've done a portfolio review, and they're actually a lot of fun. And you guys, if you're part of the community, you can have your portfolio reviewed by me. But anyway, there's a lot of fun going on Patreon. I won't plug it too much, but I'd love to see all you guys over there in the after party. And, once again, you can join for free. There's the link right here, just patreon.com/retirewithryan, or it's the first link in the description of the video. So Brandon says, I appreciate the thoughtful response. I come from the crypto world, and I'm trying to learn more about traditional finance for diversification's sake. Yeah, I remember last week, Brandon. I think I don't know if last week was maybe your the first time tuning in, but I remember seeing some of your comments about some sort of crypto thing. But man, I'm happy to have you join, even though this is not your typically your bread and butter. I'm happy to have you in here learning about dividends, hanging out with the rest of us, and I hope you enjoy it. Dividends is one of those things, like once you get going, it becomes really addicting. It becomes really fun. And so I hope that just from being involved in this, you'll see what a lot of us see as it pertains to dividends. So Matt here says, when do you think will be a good time to buy Starbucks in Snap-on? I think both of them still have quite a ways to go down. I haven't seen Snap-on show really any signs of becoming too discounted. I know personally for Starbucks, if it gets below like $90 a share, I'd probably start adding to it again, even though it is currently my biggest position. But yeah, for me personally, if it gets under $90 a share, I'll probably start adding more, because at that point I'll be able to average down and lower my average cost. So anyway. Luis says, anytime I think about adding more 3M, I just say, yeah, I feel you, man. I feel you. Let's see here. Let's go maybe 1 or 2 more comments, and then we're going to jump over to the after party. Let's see. Oh, Luis says, where are you going in Mexico? I live in Guadalajara. Probably said that wrong. So if you come by, hit me up. I'm going to just Cabo with the family for a few days. So I'll be there the 7th to the 11th. So yeah, you guys are saying Peanut had too many margaritas. Yeah, he certainly did. Look at that guy. Hi, buddy. Yeah, he's a good boy. He's being a good boy. So Let's see here. Charles says, get a 4-bedroom house, Ryan. I'll probably get a 3-bedroom. That's kind of what we're looking for. Yeah, Zal says, don't forget to let us know when the welcome party is. Yeah. Who said it? Actually, I think it was on the show Animal Kingdom. They said, I'm not going to get it quite right, but like the proper way to break in the house is with a fat rager with everyone that you love and care about. So I'll be sure to let all you guys know. Let's see. Is going to pop soon. What city he lives? Bull Troll. What city? I live in Las Vegas. Yeah. So let's see here. Let's do one more comment, and we're going to switch over to the after party. Okay. So no. Okay. Lucas says so. No happy hour on the 10th. Probably not. Yeah. That's gonna no. It'd be the 9th, right? Yeah. It'd be the 9th. So no happy hour on the 9th. But what I'll realistically do, Lucas, is I'll either do it that Tuesday, like the night before I leave, or I'll do it the night basically that I get back, or the night after, or something like that Monday. I'll make it up to you guys one way or another. So, yeah. Unless you guys have any like one more comment for me, we're gonna wrap it up here. Yeah, Lucas, that's a good question. I need to think about that more, but I'll probably do it the day before I leave, just to get it. Just to get it, I'll probably just do it the night before I leave for a little bit. So anyway, I think it's a pretty good place to wrap it up, you guys. And I was stoked to hit over 200 people in the live stream. Thank you guys all so much for tuning in tonight. Hope you enjoyed this one. I certainly did. It's always fun. I think the main thing kind of went a little bit long tonight. I really like doing the Q&A part, just seeing what you guys have to, seeing what you guys here say on the live chat. But anyway, thank you guys all so much for tuning in. It always blows my mind that you guys keep coming back to watch these things week after week. And furthermore, let's hold up the books again. Furthermore, it always blows my mind that you guys come actually with the cocktails and treat it like an actual happy hour. One of these days, guys, we're going to be doing this. One of these days, we're going to do this in person. And I've kind of started to chew on that idea more, how to facilitate that. But I would love at some point to do some in-person Dividend happy hour here in Las Vegas. Just make it a big event that the whole community can come to. It'd be hard to facilitate that, but I think it'd be a lot of fun, and I think it's getting close to being the point where it's going to make sense to do something like that. But these are the books for whoever asked me to hold that up. Education of a Value Investor by Guy Spear, and then Fantastic Moats and Where to Find Them. So really, this one's really good. I haven't read this one yet, but it looks like a pretty easy read, and it's good to know about how to identify moats. So competitive advantages. So I'm excited to dive into it. But anyway, guys, thank you so much again for tuning in. I really appreciate it. Don't forget to watch Sunday's video. We are going to be talking about, it's basically going to be 5 deeply discounted stocks to buy in the month of June. And there's some good picks in there. So I'm excited to share them with you. And I think some of them actually, just based on what I saw here in the live chat, some of them are ones that you guys are currently buying. So you'll definitely have some interest in it. But anyway, you guys have a fantastic weekend, have a fantastic night, a fantastic weekend, and I will see you on Sunday. And then for those of you joining the after party, I'll see you in just a couple of minutes. I'm going to get a little bit more water, and then we'll kick the stream off with the portfolio reviews. So you guys have a good night, and I'll see you in the next one.